Let's look at natural gas. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So there's been a huge spike here in the natural gas price. Huge. So we are 20-ish% here from the 52-week low. We've seen a bit of a minus 8% pullback, but I think that if we look here at the charts, the numbers become even more dramatic. So if we do here measure from this low down here up to the recent high, that was almost 300%. And this is now the natural gas futures. You do have the UNG. That is one way to trade natural gas. But there are these tracking errors with ETFs that try to track commodities, especially commodities that are very volatile. And if we look here at the long-term history here for natural gas, just look at this history, it is pretty clear that it is extremely volatile. Huge up and down, up and down, up and down. It is super erratic. It is all over the place. Because of that, it is highly tradable, and there are some leveraged ETFs that give you exposure to nat gas. So those are definitively very exciting. Given that there's such a long history of huge rallies, but also substantial corrections, like here, obviously, here as well, you have these time cycles develop. So let's measure these time cycles to look at how reliable are they. Yeah, they are somewhat reliable. So basically, this is one of those buy low, sell high situations. We are currently at an extremely high level, and if you look here at the indicators, so this is weekly data points, and when we look at RSI, this is one of the highest levels we have ever had, and this goes all the way back here to the year 2000. The distance from the 20-week, 50-week, 100-week, and the 200-week moving average. These are some of the highest levels we have had, so extreme readings. When we go here to the daily data points, especially on the longer term moving averages, we do have these very high readings. And also on the RSI, we usually, when we pull back, we test the low end of the RSI. Looking here at the MACD, we had this absolutely extreme reading during this rally. So we do have this very clear excessive situation. We recently pulled back to the 20-day moving average, and the bulls are bouncing a bit here. But if we look here at the long-term history, it is pretty darn clear that this commodity has a very strong tendency to pull back. The time cycles usually play themselves out, and the pullbacks can be very substantial. From this high to this low, we have a whopping minus 76% pullback. From this high to this low, we have approaching a 70% pullback, which would be a huge gain here for a bear. So obviously, yes, bulls are still in control, but we have seen some signs of exhaustion, and given that we currently have this very high price, and this has become a bit of an energy crisis, because the price for electricity has gone up substantially. So this is a major hot political issue. Because of that, there's a very high probability that politicians will do things to push down the price. And they do have things that they can do. So given that there's this massive talk about the transition to green energy and all of that, the last thing politicians and the powers that be want now is runaway electricity prices, which would delegitimize that entire green movement. So I think it is a low probability that we will get a situation like here, where we have these massively higher prices than we currently have. It is possible, but that would be such a major issue politically, because the winter is coming, so people will really feel the effect on their electricity bills. So I think this is way too hard of a political issue. I can't imagine politicians not interfering soon. When we look here at the nat gas seasonality, over the last 5 years, we do see that October tends to be strong, but there's a sharp weakening here into December. Over the last 10 years, October tends to be strong, but then there's a very sharp weakening. So we do have that seasonal data, which suggests that there is a good bearish trade here on the horizon. So yeah, it makes more sense to look for bearish opportunities than bullish at this point. I mean, it's down here at these lows, that's when it makes sense to look for bullish opportunities. You know, when RSI is making these very low readings, and the PPOs also have these low readings that tend to historically form lows. That's when it makes sense to be a bull. But when we have the opposite case, literally, then, you know, the bear hat comes on. So yeah, I do think that, you know, that would be my primary take here. As far as the leveraged ways to trade this, we do have some leveraged products. So let's go further down. So natural resources. So if you are bullish on nat gas, then you do have the Boyle ETF. You know, it is almost 300% here from the 52-week low. But as far as the more bearish trade, that would be the cold ETF. It is of course down very substantially, but that is, you know, because it is inverse. And given, you know, how huge the moves tend to be in the nat gas, I mean, the gains can become pretty substantial. So here we have, you know, the cold ETF, and if we measure some of the previous rallies, if you take this one as an example, this was, you know, almost, you know, 700%. That's pretty nice. This rally here as an example, approaching 613-ish%. So yeah, if we do get, you know, that to be expected pullback in the nat gas price, partly due to the extreme readings we have, the time cycles, and, you know, the seasonality, and also I think very importantly, the high probability that politicians will do much to prevent, you know, a major PR disaster for the whole, you know, green clean energy movement.